Just investing in Bitcoin can be a lot for someone to just start to comprehend. Now, let alone all the things that come with having 6-7 figure wealth in crypto. You need someone who understands this and who's a fiduciary. And yes, now there are a lot of traditional registered investment advisors that are open to advising on crypto, mostly for the Bitcoin ETFs. Just a lot of them, they're way behind. It hasn't even been a year yet since the Bitcoin ETFs have been approved. And it's a security, right? When they're using the ETFs, it's not the underlying pure asset, which is what we deal in. Our clients have pure Bitcoin and other pure digital assets.
You're listening to Because of Bitcoin, a podcast that shares the personal stories of how Bitcoin is having a real impact in people's lives, including mine. I'm your host, Mauricio Di Bartolomeo, the co-founder and CSO of Let It. And without further ado, let's get started with today's story. The Bitcoin white paper was announced shortly after the global financial crisis of 2007 and 2008, and it was championed by people who believed in free speech, property rights, privacy, and transparency. Bitcoin was designed to be all of the things that Wall Street and government currencies were not: transparent, open, uncensorable, and unstoppable. Since Bitcoin's inception, people have been trying to build out Bitcoin financial services and looking for ways to offer traditional financial products like dollar loans to Bitcoiners. Our company, Let It, is a good example of this. We bridge the gap between traditional finance and the Bitcoin ecosystem by delivering traditional financial services like loans and capital to the hands of Bitcoiners who need them. There's also people that started the path from the traditional finance side of the house and have been pioneering traditional finance offerings that use Bitcoin and digital assets to bring the digital economy closer to traditional finance investors. The recent Bitcoin ETFs are a good example of this. What started out as two separate and faraway worlds are now colliding, and we are witnessing a Cambrian explosion of new products in demand that are benefiting both the Bitcoin ecosystem and traditional offerings. A great example of this phenomenon is the heavily regulated and established registered investment advisor industry. And today, I'm fortunate to be sitting down with Bryan Courchesne, founder and CEO of Digital Asset Investment Management, who created the first ever RIA focused and licensed to operate with digital assets back in 2018. We discuss how the two worlds are colliding and how they have helped traditional finance investors navigate the digital asset ecosystem. Without further ado, here's my conversation with Bryan Courchesne. Bryan, how are you, my friend? Welcome to the show.
Doing great, right? With Bitcoin just continuing to hit all-time highs, it's a great time to be in the space.
When does the celebration end? Nobody knows.
I know. I just made a video for us talking about, can Bitcoin continue to make these all-time highs? And if you really want to step back, I know everybody has their own different analysis, but on a simplistic form, the bull markets are 2.5 times longer than the bear markets. And so we've got some more room to run here.
Insights already. We haven't even started. That's bang for your buck. I have of that Matrix meme that the little boy is asking, where is the top? And then, you'll soon find out the answer. It's like, what is the answer? It's like, there is no top. I can't think of a better time to have this chat. So you and I know each other from a few years back, but as this show typically goes, I like other people to find out about your story and your background. So the way I typically start is by asking you what it was like growing up in your household. Was money or finance a big topic at the dinner table?
So my father was one of 14 kids from Canada. And when he was 18, they lived on a farm up there. It was a dairy farm. He moved down to Florida to become a carpenter. That's where money was made. And there was no more room in the house in Canada. And so as I grew up, my father actually evolved into being in the concrete business in South Florida. And my mom helped him out in the office and worked alongside of him. So I got to see entrepreneurship on the ground level. Someone start a business and go through the trials and tribulations of growing a business. And that's been inside of me. And I actually started off at a young age in construction, obviously, because that's what the family was doing. And then, I'll kind of gap a little bit forward here. You might remember the great housing crisis. And so we were in the family business doing construction, and it just became a really dark time. Nobody was transacting real estate. Nothing was being built. Really hit bottom around 2007 and 2008. And that's when I transitioned into finance with the support of my family to go to New York and get into TradFi, you might say.
Well, I want to get into your experience in New York and Wall Street because a lot of that informs what you do today. But before we get there, another question is, were there any core memories in your childhood or in your upbringing that were related to money or property rights that you still carry today?
Yeah, kind of an interesting thing is I have an uncle, my dad's brother, obviously, that was just a massive Donald Trump fan back in the 80s, right? And so he had his books and he would talk about him and ended up giving me one of the books. And I read it at a young age and I took some positive things away from that. And it built that inside of me to just don't take no, go after things, dream big. And I think that's helped me and my uncles. I can't wait to share this with them actually and give them some credit for that.
That's brilliant. And I find this recurring in a lot of the conversations that I have, which is many people end up memeing what they see with their parents and their family. And so I say this almost every other time that I'm having these discussions. If you have kids, act accordingly. They're all watching. We all watched. And all this stuff comes out later in life. So you're doing a great job by setting the right example to your kids. Don't ever think they're not watching. So you had this initial journey into professional world in construction in Florida. Then you made the leap to Wall Street. How long did you spend on Wall Street and what were your biggest lessons from that time?
My really only experience in finance and trading was investing in my IRA portfolio when I was in construction. It was a very small amount of money, but I loved it. Watch a little Jim Cramer when you get home from work, do your own little stock picking. And obviously when times were good in construction before that housing crisis, the market was also going up and everyone felt like a winner. That transition was a bit tough. I ended up going to New York City. This was October of 2009, just figuring I'm going to network my butt off and try to meet some people. And then I did meet some people, but it wasn't that easy to break through. I was basically like studying finance during the day and networking at night. But I ended up meeting a great guy that had a seat on the floor of the New York Stock Exchange on the options pit. And he gave me a shot writing paper tickets in the corner. And from there on, it was like just ground level digging ditches, boot camp to get in the industry. And it was really, really great. And so I was on the floor of the stock exchange there. I was an options trader in the pit. That was like 13 months that I was down there.
It's funny, I was watching some of your content. In one of your presentations, you did a selfie when you were wearing the actual vest or jacket you had to wear when you were on the pit. And I remember those things fondly. I worked at a small hedge fund for a few months. I think this was back in 2012. And I remember watching Jim Cramer and watching the people at the pits. I think there's still some pits around. I think maybe the S&P minis is like the last one left, the physical pits. But part of me always wishes that I could go back to that point in time and look at the havoc and the craziness of deals getting done by hand signs and different world out there.
Yeah. I'm going to age myself right now, but it was like the tablets were just coming out when I was there. But yeah, it was still hand signals, yelling, somewhat of some crowds at times. But yeah, it was that kind of novelty of walking in the stock exchange, suit and tie, putting on the trader jacket, having the badge code, the headset, the buy sell pads in the front and just going out there and doing stuff. Then coming back to the booth and hedging stock or whatever needed to be done after the trade was complete, reporting back to the end client. It was a great experience.
I can't think of a more Wall Street TradFi experience than what you're just describing. Even when I was in university, that was a dream of many finance students, is to be on the pit. And you must have felt like a rock star back then. But you did something even better, which is you unplugged yourself from the TradFi matrix and you got yourself into digital assets. I'm curious, when and how does Bitcoin or crypto enter into your radar?
So 2013, I now had money. I was making money and I was saving it. I was looking to diversify between real estate and stocks, something with like a fixed supply. I just didn't like gold, didn't like the returning stuff. And I came across Bitcoin on my own accord, just researching it. When the Silk Road auction happened and Barry Silbert and Tim Draper were bidding for those, I was like, okay, because at that time, a lot of people were saying, Bitcoin's going to be banned. It's going to be illegal. And I was like, well, the government's not going to sell something that they're eventually going to say is illegal. That's the point that got me over when they ran that auction. Bought my first few units of Bitcoin. Well, I wasn't bidding with them. I mean, those guys were, they're 100,000 units, but that was the moment. It was right there within a couple of days of that.
Those were really early days. That's some foresight from you to jump in it. And I think that's a pretty smart deduction that you did, leap to the conclusion that why would this be deemed illegal if they're the ones selling it? So that was an early on signal, I guess, to you that this thing was not going to get banned anytime soon. And I think a lot of people take a while to get to that conclusion. There's no real specific trigger or threshold that gave you that certainty. But these types of events, I think that's really alpha, right? You were close to the auction and you were close to regulators. You knew that if they were vetting this is because they had reviewed this and they wouldn't be deemed a legal sale. So super interesting for you to take that signal and run towards it. So you find Bitcoin, you get your first units. Eventually, you ended up starting a business around Bitcoin and digital assets. How did you get from I'm bidding for this, I got it, to I'm going to bet the house on this and build a business?
So it was a few years later, but over that time from when I first started buying Bitcoin and over those years, I continued to work at different broker dealers on trading desks. Many times I was the only guy with a position. People knew it because I would talk about Bitcoin. I loved it back then. I started to have some pretty sophisticated high net worth individuals asking me about it, saying, hey, look, like I want to be involved. I don't understand it. I want to put more to work than just a few $1,000s on my phone. I'm looking for someone to trust. There's no accountability. Everything is self-directed. You can't pick up the phone. I started hearing these things and I said, okay, this makes sense. And this was early on in 2017, right? Before the first run up to 19 later in the year. I said, okay, look, I want to get back to business ownership. I want to build something from scratch. And I'm either going to do a broker dealer, or I'm going to do a registered investment advisor. I'm going to offer people help getting in the space from a human standpoint because they want to be guided. They want advice, what to buy, how much to buy, portfolio sizing that just wasn't out there. And so in 2017, I started that journey, the roadmap, assembling the legal teams and doing the business plan. And then the market just started going crazy. And so the business wasn't operational then. We were still building the framework, submitting the filing to regulators, trying to get this approved. And meanwhile, the price was just moving straight up. And then we had the transition into 2018. So if you recall, the price of Bitcoin had now already come back down January 1st, 2018 from the high back down to 13.5. I mean, it happened like this, that sell-off. And meanwhile, we had just started the filing now. And Bitcoin continued to sell off very hard in 2018 till about May, when the regulators came back to me and said, look, we're going to put your registration on hold. We don't want to license the first of its kind investment advisor specifically for digital assets. And I said, why? And they're like, well, there's just too many complaints and people were really having trouble with the ICO craze back then. They're investing in a lot of fraudulent stuff. I don't take defeat lightly. I talked to a guy to see if he could do some lobbying for me to get stuff done. He couldn't get anything done. And then I just basically called regulators and I said, listen, we need to have a meeting. This business needs to be approved and put forward because it's going to help people. And I made the case and I said, look, I've been in the space 2014. I had the Series 24, which is a compliance officer. I had the Series 4, which was an options principal. I had the 65 already from doing the training to be an investment advisor. And I said, I'm the best shot at something you got to be a fiduciary in the space to help people. They need help. And so the next day on May 31st, we got the registration. That was 2018 to become a registered investment advisor specifically for digital assets.
And that is a huge milestone. Keep in mind, this is 2018 SEC. This is already not the friendliest SEC, I would say.
Bitcoin had a big black eye then.
Yeah, we're coming on the back of the ICO craze and on the back of a blow off top for Bitcoin and ETH and all these other things. And so the fact that you did not take no for an answer, I mean, I think people sometimes say this in the context of business, but you took the stand in front of a regulator and you went out and basically tried to educate them, which from experience, a lot of us have done this over the years and it's not an easy task. And a lot of people, I don't think, appreciate how much of your life sometimes hangs on the line of a yes or a no, because you have built all this infrastructure and all you needed was the rubber stamp. And if you didn't get the rubber stamp, all the infrastructure was just not able to be put to work. So good on you for persevering. And I'm very happy that they finally did this.
It's like your story. I've heard it, you've said it a lot on the podcast, but it's inspiration to keep us motivated to continue to push because there's a lot more things that the industry needs that we got to create and provide to our clients.
100%. There's a lot more walls yet to be torn down and a lot more minds to be changed. So I'm very happy to hear your story and to be working with you today. So if it wasn't immediately clear, DAIM is the first registered investment advisor that was licensed specifically with the goal of focusing on digital assets. And again, today it sounds, oh yeah, who wouldn't want to advise on digital assets? But you did this in 2018. And my follow-on question is, can you walk us through the sort of expertise and services that DAIM focuses on? What are the main differences between what a client can expect from DAIM versus what they can expect from another registered investment advisor?
So in simplistic terms, think of us as crypto wealth management, a white glove service that takes care of usually high net worth individuals' needs when it comes to investing in crypto. And so they onboard with us with an investment management agreement. It's a standard wire. And then it's not held by us. We're business partners with Gemini for custody of the digital assets. And then from there, we manage the positions for them. We put assets in all kinds of unique accounts, not only brokerage accounts, but sometimes IRAs, SEPs, 401ks. We monitor that stuff. We help them figure out maybe derivatives positions, stuff like maybe even putting on a loan with you guys. And we watch this and help them get through it, because just investing in Bitcoin can be a lot for someone to just start to comprehend. Now, let alone all the things that come with having 6-7 figure wealth in crypto. You need someone who understands this and who's a fiduciary. And yes, now there are a lot of traditional registered investment advisors that are open to advising on crypto, mostly for the Bitcoin ETFs. Just a lot of them, they're way behind. They just received the approval. It hasn't even been a year yet since the Bitcoin ETFs have been approved. And it's a security, right? When they're using the ETFs, it's not the underlying pure asset, which is what we deal in. Our clients have pure Bitcoin and other pure digital assets. And so there's a big difference there in, hey, what's going on? Like, we've been having a lot of questions about quantum computing and how it could affect Bitcoin and crack Bitcoin. And that's what we've been answering a lot lately, the last few days. And so bringing that question up to a traditional advisor, you're probably not going to get the answer unless they've done some back research, or maybe they were invested and they weren't really telling their firm because they really weren't supposed to. And now they do, and they're up to speed. And so putting in the time, the business has been operational for 6.5 years now, 2.5 bear markets. There's a lot that we learn through those bear markets, handling the pure digital assets. We've had impairment on our side. We test everything for our clients on the networks and protocols, but we do that so our clients don't have the impairment on our side.
That makes a lot of sense. And listen, I know a thing or two about being around for a few bear markets, and
yeah,
it's not surprising to me that everybody now loves Bitcoin again, and it's a great idea, and everybody should be doing some of it, and it should be in everyone's portfolios. Just like there are a lot of opportunistic, potentially RIAs, there are also opportunistic lenders. There's people that are saying, oh, it's a great deal. And you're going to start seeing fly-by-nights pop up left, right, and center. And there is so much nuance to this industry that you won't pick up on, that you really only pick up on from experience. I can go on, but things like forks, airdrops, how to think, even knowing how some of the ETFs do their custody versus others, what processes they're using, that is alpha. And you don't get that with anything other than time in the market. Time in the market beats timing the market every single time. And between DAIM and Ledin, you have two platforms that have time in the market. We didn't try to time this thing. When we believed in it, we went 2 feet deep in. And I think that's the kind of partner that you're going to want to work with if you're trying to do this for the long term. This to us is just not an incremental bump on their P&L. This is our life. And so that's very aligned with our principles here at Ledin. Now, you discussed the process and the sort of last red zone moment with the SEC to get this thing to the goal. But can you describe what it was like to pitch the SEC on the first ever digital asset RIA?
The RIA attorney that I had specifically for this knew the submission process, filling out the paperwork, and they were glad to take the business because I was paying them. I funded this business with my own units of Bitcoin. And so they wanted it in cash back then. They may look back now and said, we wish we would have accepted you paying some Bitcoin like I offered to do. They knew the steps to actually get things across. It was up to me to amend the language. We took out a lot of the stuff that referred to stocks, fixed income products, annuities, and we built back in digital assets. We went with the digital asset term. We thought that that was something that the SEC was going to stick to more. Aside from cryptocurrencies, we like to think of cryptocurrencies more along the stablecoin side of things, and then ones that are used for payment. Digital assets as a unit of something to invest, an alternative investment. And so the submission went in that way. And it was unique because there was two things that were really going on that slowed the process and then eventually actually got us the registration. And one of them was education. Just like you said, it felt at times that the regulators actually for their own personal benefit wanted to know what was going on or how to invest in it. They were intrigued. And it didn't seem like it was so much questions that would help the framework of the business, but those are things that we have to do. And it helps everybody along the way anyway. And then the other side was risk disclosures. And because the whole space was selling off so hard, it was interesting. You know, there was times where they would leave the office and I was like, that guy's probably going to go buy Bitcoin now after this, right? And we're not even approved yet, right? And so that kept me motivated to keep going. I knew that there was something here when I could get that feeling from them, from a regulator, right? And then the next day they would come back and it would be a little bit more doom and gloom. But the gloom side was like, hey, just really tell everybody how risky this is. And it got to the point where, we put in some risk disclosures. Yes, Bitcoin can go down by 80%. The network can go down. You may not be able to get your money. The exchange could go down, like Coinbase was having, at that time in 2017, they were having some difficulty. And so we kept putting these in, and then they'd come back and say, can you add some more that cover this situation? And so it actually made me feel like we were getting closer to the finish line as we got into May. But then when I stepped back and I looked at this list in our filing, I'm just like, wow, nobody's ever going to give us their money to invest because they're going to be completely scared away by all this. We ended up working it out, modifying some of the language. It was pretty thick, but investors kind of read through it. And what you tend to see is, back then at least, when you overemphasize the risk of investing, they're like, okay, it seems like you actually covered all the risks that could happen. Now that I know everything that could go wrong, I feel comfortable doing this. It's the unknown that scares people into doing it. And so it wasn't so bad, actually.
That resonates so much with me because so much of my work at Ledden also has been explaining to somebody how a Bitcoin-backed loan works. What happens if your custodian gets hacked? What happens if the exchange goes down? What happens? And we have our own set of risk disclosures, but a lot of times people don't necessarily all want to read through the T's and C's. They want to have these conversations one-on-one. And it was them sensing that we had thought through each scenario so well. There was no scenario that they would throw at us where we didn't have an answer that was clearly thought out with implications and what happens after this and the knock-on effects. And just knowing that you understand what could go wrong and how to react in those scenarios gives people a world of confidence because they haven't had the time to think through these scenarios as much as we have. And maybe they've thought about the potential challenge, but they haven't thought of the solution, or the solution doesn't check out. And it's really helpful to someone when you feel like you're talking to a person that has gone through and done the homework.
Totally. And I can speak to this. We just went through a 6-figure loan for one of our clients. This person is very well educated and knows crypto very deeply, but because you obviously been through all these situations and the questions that we had as we walked him through with you, you were there. You answered quickly. It was clear, concise. It made sense. There wasn't a lot of noise. And it's, okay, this works out. This is how it is. The paperwork, explaining between the lines, made everybody feel comfortable. And then the way the collateral was sent, it cleared. And then the loan amount was sent on the blockchain instant. It gave us all the feeling like the mortgage industry really needs to play catch up, because this is just so much better to get a loan than going through the process of just folding over everything of your personal life and still maybe getting a couple percentage points added to your mortgage. And so you did an excellent job, but that only comes from you guys doing it through bear markets.
Right.
It's really the bear markets. The being there as a therapist for all these clients. Hey, this is what's going on with your loan. You may not have the exact right answer. It's going to be pretty close because of your experience. Answering quickly is the important part. Giving some kind of answer, you can always update and come back, and you're really good at that.
100%. And likewise, it's been a pleasure. We're going to get into the partnership and how we've been working together. But I agree with you. People want to feel like they're dealing with professionals. And by professionals, I mean, this is our life. We live and breathe this stuff. There's very little things that we haven't seen, either by curiosity of our own account or because that just happens because we've been in the space for so long. So hear you loud and clear. And we try to create that same feeling with our clients. There is no second best when it comes to loans. There is no second best when it comes to RIAs. We bet on this a long, long time ago.
It's the human service, and there's no plan to ever tone that back. It's part of the business, and it will only be needed more as people's wealth in the space grows larger. They're going to end up needing a trust account. They're going to end up wanting to borrow against it instead of paying taxes. They're going to want beneficiaries. There's just so many things that are going to come into play that people aren't even thinking about now, but it's really already starting to unfold, and we're going to be there to help each other. We'll help each other with helping each of our clients.
No, 100%. So now that we're on the topic of clients, can you talk to us about what does a typical DAIM client look like, and what are the types of services and guidance that they're looking for?
Most of our clients are business owners, well-to-do people. They want to put a larger allocation, usually in the 6 figures, to work in the space, not a little bit larger. And they want to know that they're going to have privacy, that things are going to be secure, and there's going to be somebody watching over these assets for them. It's that comfort level. And that gives them the ability to size up into the position more appropriately. Where if it was just self-directed on one of the centralized exchanges, and you can't get help, and they shouldn't be saying what size people should put into this, they may be underallocated to this space. And so it's important to go over that. So a lot of our clients is well-to-do people, deposits in the 6-figure range, and then we manage the assets for them. We do like clients that come in on a referral basis. We have great clients, and we want to take care of more great people. and do it appropriately. And then we're probably evolving the business to just maybe raise the minimum a little bit, maybe do it on a pre-qualified basis if we don't know you, because the better that we can continue to offer this human service to our current clients, the business will grow, it'll keep them happy. And then we can offer the same service to people that understand what we do here and the value in it, and let us just take care of things for them.
That's very clear. And I think there's so many people in that camp. It's easy for us to think as Bitcoiners that everyone knows what this is like and everyone's comfortable getting or buying a Trezor or a cold card and putting their assets on them, or even vetting or reading the risk disclosures of a counterparty, or after we've seen what can happen when you don't properly diligence a counterparty. So I can only see demand for your business growing and getting bigger. Now, in terms of the services they're looking for, do you find that they're asking you about position sizing or what tokens or what services or how they can get more of their Bitcoin? If you could split the pie, how many of them want just Bitcoin? How many of them want like just broad exposure to the space? What are some of those clients' questions that stick with you?
It's probably 1 out of 20 that wants just pure Bitcoin, like of new leads that come in and client that onboard. It might not be as many as people think. Really what happens is, and there's still a lot more people to onboard, I can just tell you because of the conversations that I have, these people come in and they just say, hey, I hear about it. I like Bitcoin. I understand it a little bit. I have a stock manager. He knows what he's doing. I just want somebody that does the same thing for crypto. I don't want to be researching this stuff, trying to understand what it is. They don't even know what like staking versus proof of stake. They don't even get that. They know that they need to be early. So they need to get somebody now to help get them a position as this industry just really grows. And so that's really where it's at. Those other 19 out of 20 are really, you guys got this and you manage it for us. In our model portfolio, we run one strategy outside of Bitcoin only. It does keep a majority of the assets in Bitcoin, and we strategically allocate away at times when we think a project's going to outperform Bitcoin. And so that's just enough added risk to add some alpha to the account.
That's super helpful. Are there any examples that you can share without naming anyone on how you've helped them navigate the ecosystem or maybe get more out of their investment, or maybe offering something that they didn't know existed, or a financial service that gave them that ability to go make an additional investment? Anything that stands out to you?
It's definitely the IRA side. There's a lot of people that still don't understand that you can put pure digital assets, pure Bitcoin in a tax advantage account. And not only that, if you have a traditional IRA, that could possibly be backdoored into a Roth IRA, which has no gains in the account during the life of it and no taxes through the life of the account, and then no taxes at time of retirement. Now, this is a United States-based thing because we operate just in the US, but that is still surprising. They're just realizing that they can have digital assets in an IRA. We don't run it self-directed like some of the other platforms out there. It's still under our management, our discretion, and it goes into our model portfolio or Bitcoin only. But yeah, there's quite a bit of that. And a lot of our clients end up having multiple accounts with us. They realize that they can do the IRA, and it's like, okay, well, I intended to do a brokerage account because that's all I thought I could do. Well, maybe that turns into a trust for the family. And then there's the IRA that goes with it. And it's been really great to see some of these IRAs grow to very large numbers being invested in crypto over the last several years.
I'm also a huge proponent of not ETF Bitcoin in your IRA. I don't have anything against the ETFs. I love the ETFs. I think they're great. But the fact that you can hold spot in your IRA as well is a massive advantage. I think eventually we're going to see anything that tries to mirror Bitcoin in the equities market trade at a discount to spot, just because it's a lot more neutered in the sense that there's a lot less things that you can do with it vis-a-vis spot Bitcoin. So I do love the fact that you can have retirement Bitcoin and there's no real requirement for you to wrap it into an ETF. You can if you choose to, but you can also hold it spot.
There's two things we're talking about there is in the reason for spot Bitcoin. Well, one, the ETFs only trade 9:30 to 4:15 Monday through Friday. A lot of the volatility, which is actually a good thing in Bitcoin, likes to happen when there's low liquidity on the weekend. So you can position yourself into something or out of something with a limit order. Should you be trading that way, we see that that's a bit of advantage to where things are. The other thing is try to get a loan against your Bitcoin ETF position right now. Like call your broker dealer, call Schwab, and I don't even think Schwab has it yet, by the way, and see if they'll give you a loan against it. You're going to see that they're most likely not lending against it. You have to be in this system like you guys at Ledden to get a loan against Bitcoin, and you guys require spot Bitcoin.
That's right. No second best. This is a great segue into this question. So recently we've seen a surge of demand at Ledden. Our demand has nearly tripled from mid-November up until now. And a lot of these people are looking for options to finance their Bitcoins because they don't want to hold it. They see great value in holding them long term, as price action is obviously not surprisingly validated. So are you seeing similar inquiries from your clients? Are people coming to you and saying, great, I have 7 figures now on this thing. What can I do with it? How's that been like?
We segregate them into 2 buckets. One, the IRAs. The IRAs don't necessarily matter because trading in the account while it's live, there's no taxable event in there. And then so we solely look at the taxable account bucket on that side. We do tend to see clients want to defer or not see any trading happen in the accounts when we're this close to the end of the year, so that the taxable event, should it happen, be moved into 2025, which then they would possibly pay taxes on in 2026. We're not so much of a fan of that. Look, if you really need some of your gains from Bitcoin, which I think people should use some of for lifestyle events, things that make your life better, it is great for that. But understand that you will need to pay taxes in that unless you're in the position to take out a responsible loan with you guys like that. And so those are the 2 types of ways we drift the conversation. Do you want to look at a loan so that we don't have to sell us and incur a taxable event? Or are you prepared to pay taxes? I wouldn't just wait for a numerical date. Things can change in the market. You should get used to paying taxes on crypto gains when you sell some. I mean, we see it with Roger Ver. So we're big on our clients making sure that everything is filed the right way with the IRAs, with the IRS, and also with 1099s. Look, we don't want anybody to get in trouble in an audit. We want them to have all the information needed. And so that just comes back to, these are really the 2 routes that you have. Take a loan or be prepared to pay taxes. Make it simple.
That's brilliant. I'm a big fan of the thinking that you shouldn't let arbitrary government dates or filings of this guide your behavior. Who decides when the cutoff is? Markets don't think that way. People don't think that way. Your year end could be very different from someone else's year end. And so you're going to be making decisions on things that are very subjective, I find, and the outcome might not always be what people expect. So it's fascinating that you have a similar view on that.
Because let's look at it this way too. If you push out taxes and a large tax bill to 2026, and that's possibly near the bottom of the next bear market, and you have capital on the sidelines where you can increase the amount of units that you had before, but instead you take from that and you pay your taxes, all that hard work that you did is just gone out the window because you simply just took cash available and paid taxes. Where the better thing, and we're trying to guide clients to, is, hey, let's be prepared for this. And then also let's look at maybe taking a loan. Like, let's go to Ledden and see if it's the right time to size up into this.
That's a great segue. Again, you're jumping into my questions here, and it's amazing. So we have partnered. DAIM and Ledden are basically working together to help people that need loans and people in our side that might be looking for RA advice. So can you explain, not necessarily what it's been like to set up, because we don't want to bore people with that, but what has that looked like for your clients? Like, what has that experience looked like? Can you walk us through an example maybe of a client that has done this?
A lot of it is text and phone calls, old school stuff. We read all the documentation. We understand it. We've tested it. We try to be able to answer the questions without even having to go to you and asking you a question. But it's good knowing that you're there and you have stepped in when needed to reassure the client, because they do like seeing you come into the play too. And it's just not us alone, because a loan is a lot different than just keeping some assets on a centralized exchange. This is different now. You have collateral here that could get margin called or stripped away. And so this stuff needs to be monitored. And then we overlay our own proprietary system on watching the loan as well on a more conservative basis, aside from what you guys have in place for the clients. We want to be very clear and transparent with our clients on where they're at with the loan, if Bitcoin has gone up a lot, if maybe some of the collateral is able to come back to the client. But then in the other direction, should things sell off, never want them to be in an emotional place where they have to make a rash decision. We're going to try to go back and say, hey, look, before you put the loan on and there was no emotions, these are the plans for these situations and what we were going to do. We need to stick with those. Let's not deviate from the investment plan.
It's really, they get access to our products with an extra layer of oversight and investment advice, because that's what you're licensed to do, which I think for many people is a great reassuring layer of comfort for them to.
They're not doing it alone.
Correct.
Like, who wants that, right? Like, they wouldn't just be facing you when these loans get large, 6-7 figures. In the traditional space, this is done with a team. You wouldn't just do this by yourself.
I just had another guest a few weeks back talking about algorithms versus professionals, and talking about how algorithms always be professionals, even when trained on the same data. And it goes back to this idea of stripping emotion from a decision. You go into this loan with a clear plan that you remind them of constantly. And there's a clear action plan. If it's a happy path, we do this. If it's a flat path, we do this. A downside, we do this. Do not deviate from this, because then all the other projections are going to get impacted. And it's that constant sort of remove the feelings. I'm here. You're sort of like a Sherpa, a Bitcoin Sherpa, if you would. So you've dealt with regulators, I believe, under both Trump and the Biden era, if I'm not mistaken.
Yes.
So we'll spare everyone on what we think of the previous SEC. But now we've just had a signal of a new administration and we're going to get a change in the SEC. What do you expect to see from the SEC under this new administration, and what of that could impact your business?
So on the SEC side, it's going to be more on, are we going to see, Solana next as an ETF, right? It's going to be more on the issuance of securities on that side. As for the businesses that operate underneath, like ours, we're here. We've got the track record of 6.5 years of managing these as an RIA. It's not necessarily required to be that way, but we did that as an additional layer to help our clients feel more secure and accountability when they invest through us. And so I think we might start to see a little bit of that, but Trump is very big on loosening regulations. So we might not. What could really happen here is the SEC just focuses on more obscure, larger alternative investments, and then just maybe expedites the path of listing ETFs for other digital assets. Whereas the rest of the players in the space, Coinbase, Gemini, the centralized exchanges, and us, we just continue to operate the way that we do. But that could be a bad thing, I think, a little later on, just to warn people. When you have deregulation, it really allows people to, you and I have seen this every bull cycle. It's like, man, that guy just came out of nowhere. That team's got a really good website, but what's the history? What's the track record? It's nil. But some people don't do that much due diligence and they fall for that. And we think that there's going to be quite a bit of that out there. There's still a lot of pig slaughtering schemes happening out there. And so if people could find us first, we can usually help them avoid some kind of impairment. But for the SEC, I really think that's it. A lot of us are just going to continue to operate the way that we are. Maybe we see a few less audits over the next few years in office is maybe what we see.
Well, there's no catch-all to save people from being accountable to themselves. And I think a big problem is that there's very little of that. Unfortunately, my grandfather used to say common sense is the least common sense of them all. And it's sadly true. We did have a period after the bear market and the blow-ups where people were very diligent and very obsessive about keeping whatever little they had left after the nuclear bomb that went off. But I'm already starting to see glimpses of that losing behavior. You're seeing companies popping out of nowhere, projects popping out of nowhere, lenders popping out of nowhere, obviously offering you the world and a half, which eerily reminds me of the BlockFis of the world and the other people that came out with too good to be true offerings. And later we realized that we're all too good to be true. So if you're listening to this show, you're probably pretty personally accountable. So you're not the person we need to be talking to, but
we hope the Google algorithm picks this up though and puts it in front of some other people that haven't invested yet, or if they haven't, they're looking for a loan, it at least goes to the right place.
And this is why we do this stuff, right? You don't have to be a Lending client to listen to this or a DAIM client to listen to this. This is all just out there for you to consume.
Yeah, I mean, the best thing people could do is just share this, right? If there's something that you think that you heard on this podcast that rings in your mind as a conversation or something that you heard from one of your family members or your friend that you might say, oh, that's a little bit more risk than they should be taking, or that doesn't sound right, just forward them this link and then they can get in touch with us and we can probably help save a few more people from what's going wrong, and then do this the right way. The more people we help do it the right way, the more that this spawns.
Completely agree. By helping others, you help yourself. We're going into what I like to define as the financialization era of Bitcoin. We got the MicroStrategy Trojan horse doing its thing. We got ETFs doing its thing. Soon we'll get the army of sales desks around the big banks pushing this stuff. BlackRock came out with an investment for Bitcoin allocation suggestion. I think that companies like DAIM, hopefully and Lennon too, but I think you guys are uniquely positioned to take market share from all the other RIAs that didn't jump on this when they should have. And they're now basically retroactively trying to come into the space where you guys actually did walk the walk way back when it wasn't cool yet, as they say. So what do you guys have planned for the next year to capture or capitalize on this opportunity? And what do you think this is going to do to the broad RIA ecosystem?
Kind of two parts. We're going to answer how we plan to continue to grow the business, and then I'll talk about the broader RIA ecosystem. On our side, it's really that keep the human service, being able to call our clients back right away, being able to message, being experts and fiduciaries in this space. If you need to know or want to do an IRA, we got you. If you want somebody to manage a portfolio for you because you don't understand the space, we got you as well. And we have a 6.5-year track record of managing assets that we can back up and show you that's outperformed a buy and hold a Bitcoin alone. And so just continue to build on that. And then with some key partnerships like what we're doing, that way we can just reach more people. Because when someone puts on a large loan on your side, they're most likely going to have a bigger stack of something somewhere else that may have grown by multiples. That again comes back to you can't have beneficiaries on your treasure wallet, right? And if it's not in your will and you don't have someone that can access it, those are gone. Those are lost coins. And so there is a point where having a fiduciary in the space with a licensed custodian, maybe not for all of your stuff, but for some of it, that way you're hedged. Should something happen to you, is really going to help you in the space. And we know how to do that stuff. You can't go back in time and put the experience in like we have. And so leading to traditional advisors, we talk to a lot of traditional advisors. Our bulk of our assets do come from, they were in stocks with a traditional advisor. That advisor needs to sell some of the positions, and then that transfer comes over to us. But usually it's a smaller portion of the overall portfolio. It's not everything. And so we do offer a sub-advisor referral fee sharing program should they want to use it. Or a lot of them are just like, look, I don't know the space. We're sending over a small amount out of what I manage. Just take care of them. That's all we hope you guys do over there. And we looked you up and you guys have a track record that can't be matched. And so from the RIA space, what's going to end up probably happening for those guys, besides making an allocation manually themselves to it, they're going to be waiting for an index or a mutual fund and something to kind of package Bitcoin into it. And then that way the allocation is on a sub allocation, right? It's not them making a direct shot. The biggest fear that there has been and will continue, it's going to come back when we start another bear market, is, people's stomach when the volatility hits to the downside. And these advisors, when they're just generating 9 to 11% per year, or maybe a little bit bigger because the S&P's had 2 great years, the vol is actually low on them, and that keeps client turnover low. The last thing they want to do is rock the boat and lose a bunch of AUM, so they don't see it's worth it to put on a 1 to 3% position manually in Bitcoin right in front of maybe what could be the coming bear market, and then have to deal with all that and people transfer off. So they're going to continue, I think, to look to offset the fiduciary capacity of investing in Bitcoin.
That's a fascinating insight. And I think this is why you guys are so well positioned, is because I think back to conviction a lot. There's a reason why we don't panic when Bitcoin goes to 3K and 5K and 10K and whatever. It's because we've seen it there. And not only that, from my perspective, I saw why Bitcoin is freedom money, because it's unstoppable, uncensorable, and accessible to everyone 24/7. That's what makes Bitcoin valuable. A lot of people haven't seen that. And so it's natural for them to think, what is the real value? Oh my God, was I just duped? Did I come in at a hype moment when this was all going down and was never really any value in there? But for people like us that have seen it, for me, I sleep very peacefully at night. To me, it's an inevitability. And so it's about managing this volatility. And on the other side, there's this beautiful blue sky if you just manage the volatility. But for people like us, I used to think a lot in dollar terms. Now I think a lot of it in Bitcoin. Like, Mr. Market is crazy. One day it's $1 million, one day it's 300K. But over time, the feedback loop has reinforced me in my belief that this thing is unstoppable. Nothing stopped this train.
I can't agree with you more. We made a social media video yesterday, and that's one of the things in there was, and we're seeing this from more sophisticated investors, is that everything is priced in terms of Bitcoin. It's opportunity cost against Bitcoin with everything. And we talked about this early on in being invested in crypto, 2014, 15. If you look at an investment, is that going to outperform Bitcoin? Are you going to feel more secure? Are you at CEO risk? Is there an earnings risk? Is there sales risk? Bitcoin removes all those. And we're really starting to see the frustration with real estate. The carry on real estate, it's just so painful. There's so many middlemen. The transactions are getting slower. I mean, I talked about it earlier in this. When you go to get a loan, all the stuff you have to divulge, and it's just like, are you going to mow the lawn? Are you going to take care of the water? And then the come out costs, the brokers, it's just getting to be painful where you can take your Bitcoin with you anywhere. You can't take your land, and it's finite. It's scarce too. And so it's really cool about Bitcoin as the investment thesis shifts with people. It doesn't matter if they're in now or been in for a while. What got them in the beginning, like me, was different from why I'm in it now. And it will continue to evolve and change because Bitcoin really solves just about everything it could when it comes to investing.
That's a great way of rounding it up, because we ended up with a very maxi saying. Bitcoin fixes almost everything. We're pragmatic here. It doesn't fix fully everything, but as far as financial assets go, almost everything.
I don't think I could look at a guy straight in the eye if he tells me it fixed his relationship.
But the meme stance as far as financial assets go, I do agree with you for the same reasons. I've always said this, I'll say it again, borrowing against your Bitcoin will be cheaper, faster, and more efficient than borrowing against US real estate. It's just a matter of time. And it will continue to demonetize real estate. It will continue to demonetize gold. It will continue to demonetize bonds and things that shouldn't really have been monetized in the first place. But I'm excited about what's ahead for both of us, and working together. I get to chat with you often. So next year is looking really well. Where can our listeners find out more about you and about DAIM?
A great place to start is the website. It's DAIM, DAIM, DAIM.io. It's a great place to start. You can contact us there through it. The social media handles, my name's Bryan with a Y, last name Courchesne, Courchesne. You can start to find me out there, but the website's a great place to start. And we're on all social media. So if you just search a little bit, crypto wealth management, registered investment advisor, something will pull you towards us and we'll be able to help you out.
Brilliant. And we'll also put the links on the show notes for anyone listening that wants to take a look and doesn't want to go on Google. But Bryan, this has been excellent. I know you're a busy man, so thank you for taking the time. And I look forward to doing this again in some time and seeing where things are at.
This is all about just us having a great partnership so we can take care and help out a lot of people now with services that are really needed for Bitcoin. And I'm glad we're working on this together and we're going to help a lot of people.
Brilliant. Well, to 2025 and see you soon.
That's it. Love it.
Every entrepreneur's journey is very different, and yet they all share many things in common. Bryan's story is one of resilience, never giving up, and a continued push for progress and innovation. From pouring concrete in Florida to managing million-dollar portfolios for wealthy clients, he is a testament to hard work, dedication, and ambition. Through companies like DAIM, Bitcoin and digital assets are getting in the hands of more and more people. There are many people who wouldn't feel comfortable participating in this industry without feeling like they have a professional on their corner. Not only could they be helpful in avoiding common pitfalls, but they can also guide you into financial services that can help you get much more out of your investment, like Ledin's Bitcoin-backed loans. I think there's a very bright future ahead for companies like DAIM, as there will be many new entrants into the space looking for professional advice in the years to come. I hope you enjoyed the show, and thanks again for listening. We'll be back soon with another great guest. If you enjoyed this Because of Bitcoin episode, I would be very grateful for the 5 seconds it would take you to drop us a review and give us a rating on your favorite podcasting platform. This will really help us reach even more listeners. And if you'd like to learn more about Bitcoin, be sure to check out our newsletter by subscribing at ledn.io. That's ledin.io. Again, this was Mauricio Di Bartolomeo. Stay tuned for our next episode. And until then, muchas gracias y los quiero mucho. Ciao, ciao.